Hey, good morning everybody. Good morning and good afternoon here from London. Welcome to another small account challenge with the Mohawk Forex team. It's myself here in London and we've got Justin over in the States. And today, Justin, you are, where are you?
I'm in Louisiana.
Oh, perfect. The trading state.
That's it. The roving trader.
Roving trader. Every state covered. That's it, apart from
That's it.
Alaska.
Yeah, I'm not going to Alaska. Too cold.
Ice Road Truckers, man. You'll be on that program.
No, not me. They can have all that fun they want.
So today, yes, there's lots of news. We're doing our small account challenge. We're starting at $30, $40 again, just because people want to see it. That's great, fine. See if we can actually scalp with that. And our method is the same whether we use a big account or a small account. That's the whole point of doing these for entertainment purposes streams. We have a bit of fun, discuss the markets, trade the news, and see if I can win my dinner tonight, as I had a nice bottle of red last night thanks to our 20% return, 22% on our win yesterday. And there's no harm in doing that. You can compound your account if you want, but also you can take your money and treat it like a wage, whichever way you want to do it. You know, there's no wrong or right way in my opinion on that. Treating yourself if you have a successful day trading. But today is all about the news. Like I say, in the next 10 minutes, we've got the goods trades balance, which is the first high impact news event. And again, if you go to my FX book, all the information's on there. Backed up with the wholesale inventories and the retail inventories. So we're hoping all three, excuse me, will be the same direction. Then we've got the open, which will use this trades balance result as a gauge for the open. And then we've got the new home sales 30 minutes after the New York Open. And then 30 minutes after that, we've got the EIA crude oil stocks and the gasoline, which we'll probably have to switch to the bigger account to trade, because obviously you can't trade those with just $30. And then obviously later on in the afternoon for the US and evening here is the big one, the Fed interest rate decision, where again, some guys go in scalping live on that as the Fed are talking. And we might well do that. We might well have a go at that, see what result we get. Again, I won't be doing that with a $30 account. You might lose that in two seconds. That's the lineup. We've got Bloomberg on in the background, listing for anything that's going to happen regarding Russia and Ukraine, which will obviously send all the TA totally against
out the window.
Yep, out the window. So we're keeping that in the background. We check the news, and it's really all our earnings for the NAS. Futures are up, and obviously everyone's waiting for the Fed decision, but we've got a lot of scalping to do before that Fed comes out.
Gold's retesting our neutral zone. Actually, it's starting to break through now. But I will tell you, this gold is looking like it's setting up for a push down on the news. So we may have some good results coming our way. Be sure to pay attention to my FX book for that result.
Yeah, and as it's pre-market, pre-open, obviously with gold, we tend to initially trade the way off the result, unlike normally where we correlate gold obviously with the dollar to go the opposite way. And obviously you could read that on my FX book. It's all there saying a higher than expected figure is positive for the dollar, which usually means worse for gold. That's how it usually works, but not when we're not in the open market. When we're pre-market, we like to trade the liquidity grab, the manipulation, whatever we want to call it. And so usually you'll find gold doing that, and then it will go the opposite way before the open, and then on the open 5 minutes before, you usually get a little reversal, and then we trade the way we should do on the open. That's kind of how it works, and that's the strategy we stick to, and been successful. Now, if the result is a million miles away from the consensus, the news, then this is where you will then get gold and the dollar going the way they're meant to go. If it's a massive difference, you still might get the spike the opposite way, the kind of manipulation, but it's not as much as if the result is around what is expected. So again, we always have to keep an eye on that as well. But we're expecting minus 94 billion over minus 97 from previous. Obviously, We'll keep an eye on that. I've got 5 minutes to go. As Justin said, gold is now
broke resistance.
trying to break. It's hitting our breakout zone, as you can see. I'm just going to move this. That's back testing purposes. See the news lined up here.
Julie Norman, as always, come back soon and stay close. There's so much to talk about.
What we're waiting for.
On the situation at the moment, the situation in this market. We've got a bounce back going into this Federal Reserve meeting with Chairman Powell. A little bit later, we'll catch up with Jeffrey Lacker, the former Richmond Fed president. As we mentioned in the last couple of hours on this program, the former officials, Tom, have been so much more.
Looks like we're catching a little resistance right there at the breakout zone.
Yeah, and this is a really, really important and a great selection by our team to bring Dr. Lacker on out of Wisconsin-Madison. This is a guy who is steeped in caution. This is a much more conservative voice.
Just so people can see, there's my account. Again, IC markets, the leverage is 1 to 500, and we've actually got $42.57 in the account at the moment. It was actually 30. They're just not. I did a withdrawal yesterday. It takes 24 hours to come out on IC markets, which is fine, but at least it's a live account. They're the trades we did yesterday. It's the highlight. Again, I don't use this for any analysis at all, other than just clicking the buy and sell buttons. So we're using 0.01 lot size, of course, as small as you can do. You can see their margin is only $3.4. There's a margin available. So this is for anybody who wants to start trading live after practicing on demo for a period of time. This is what you should be doing. Is gold is one of the best ones, if not the best one, to practice with a small account. Obviously, only risk money that you're prepared to lose, not your life savings or the rest of it, or not a stupid account size, until you've actually mastered the strategy that you want to do. Hence the reason why we do these small account challenges. You know, and if we blow it, we blow the account. If we break even, break even. If we take a win, we take a win. And I treat myself to a nice dinner or bottle of wine on it. So it's entertainment, but just to show you that you can do this with the right setup and the right mentorship. Not easy, but if you can get it nailed on this level, then obviously when you've got a bigger account, it should be easier, less stressful. So that's my setup for today.
John, we got to do a surveillance correction here. I'm in the
that was yesterday's trades, as you can see, which we made $8.46 from a $30 start, so that was a good percentage increase. A couple of losses, but everything was in the green overall, so that's what we're trying to match today. Onto my other screen. And like I said, I don't use that for analysis. We use this trading view and our axe trading system. Waiting for the countdown, got 3 minutes to go. And like I say, if everyone wants to get access to this this system and access to me and Justin as your mentors and teach you how we use this and how we scalp with it, then obviously go to the website www.mohawkforex.com or check out in the description below the YouTube channel. The information's in there, and obviously give us a like, and subscribe if you've not already subscribed, as we're just a small channel, just growing bit by bit what we like.
And I might be a little bit biased, and I have had a bunch of different indicator suites, and the Axe trading system is one of the most powerful indicator suites that I've run across to date.
Agreed, that's it. And what we like about it is there's only three indicators, so you don't have to have a pro account on TradingView. You don't have to pay the $25-30, whatever it is. You can have the free account and you get the 3 indicators in the system, and that gives you everything, and not just what we're using here. There's a multitude of all the best indicators that we've tested that work really well for scalping on these kind of time frames. This is just the one system that we're using right now. In this year we might change it up again, who knows, but when you keep being successful with something, don't change it. You know, too many people get bored and change, but if it, you know, if it ain't broke,
don't fix it.
But if people do want to experiment with it, you know, and these get updated all the time, there's lots of things built into this suite, as Justin says.
There's a lot more behind the scenes on it.
Well, that's the good thing, like I say, is that you can just use a free TradingView account. You've not got to pay.
And there's strategies that we have formed and built and tested behind each one of these different indicators.
That's it. Yeah, we only show stuff that we believe in and actually, you know, work. So we've got a minute to go. Here we go. Right, just make sure I'm on gold. Yeah, on gold. Make sure my leverage is right. Everything's sweet.
Sitting right on that neutral line.
Yeah.
It can go both ways.
Well, if it's bad news, let's see if it drops and see if we can get 10 pips on the drop. Going to go the way of the news initially. Let's see. 10 seconds, 14 seconds. Good luck, everyone. Let's see. First trade of the stream. What we're going to get.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with
Wholesales are worse than expected.
Television and radio.
Retail autos are, and wholesale inventories, yeah, 2.1. It's waiting for the trades balance. Come out.
Because Scalpers is doing much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
All just sat there, look, waiting.
Yep.
Preliminary release, remember. Z minus 94. Refresh. You have to refresh. Slow result, this one. If Bloomberg announces it before.
It is Fed decision day, and we have a bounce back from New York City on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro.
That's worse than expected.
Bouncing higher on the Nasdaq by 344, up by 2.4% on the S&P 500, up almost 70, up 70 now at 1.6%.
101.
Yields just a little bit.
They're saying green and they're saying red.
On 10s to 177.62 on the year, Tom. As you know, we're down hard on the Nasdaq.
Worst expected result
on the session. You have a bounce.
No, the markets are there. They're not as correlated as they were on Monday. And as we go into this Wednesday Fed meeting, join us this afternoon, folks. A great.
See if we get a drop down to this level here.
It's more of a
that might be nice.
Enthusiasm here to get to the message, to see what Jerome Powell says. We get informed by a gentleman from the Richmond Fed. Jeffrey Lacker came out of University of Wisconsin-Madison and had to step into maybe the biggest shoes and biggest cultural moment in Fed America, and that was all of the heritage and the conservative ethos of the Richmond Fed. Dr. Lacker joins us this morning, the former Richmond Fed president. Jeff,
wait for it to hit that level.
To speak to you as well. If I walk down my hallway at home and I threw half my books out, Jeff, because I'm blind, like 2 years ago, I kept all the textbooks. There's Mankiw, there's Abel Bernanke, there's Carlin Soskis. There's all these great books, including what you studied in 101 at Wisconsin.
Push down a bit more.
Is any of this Fed moment, this theory, this framework, is any of this Fed process in the textbooks?
We're there, yay, I got it. I got $1. There you go, first trade. Got the sell on gold there as it dipped down because the news was worse than expected. So we took the sell, and there's our first win of the day. Yay, $1. That'll do nicely.
Their record is not that great. I think less than half of the time. Have they done it without successfully, that is reduced inflation, without successfully, without
just show you, there it is.
Economy into a recession.
USD $1, 74 pence, $1. So 2 sales on gold, all based on that news. The market reversal, I went the way off the news. We sat waiting to see. I'm going to push down a bit more. Let's have a look what we've got in terms of a gap.
I think they're threading a needle.
We'll go down another 3-4 pips. So wait for RSI to get into that neutral zone.
Rapidly enough to ease demand and ease inflation.
And then hopefully we'll get a bounce off our line.
They are going to be mindful of not going too fast and pushing the economy into the recession.
That's a good start.
Be mindful of Psalms rule.
See if RSI is going to enter that neutral zone or not.
Amazingly consistent empirical regularity that the unemployment
bounced off that resistance.
0.5 of a percentage point without rising 2 or 3 percentage points. So, you know,
A good trades balance, worse than expected by 7 billion. So US 30, you could have been taking the buy, but you wouldn't have done because look where you sat, right on some crazy resistance there. So the buy is very small on US 30 if you're going the reverse. And you might get 100, might get 10 pips as a risk because you're sat against that. You're looking, you know, and same as gold now. Going to reverse, or is this going to drop? Going to sit on this level. Below it, we've got 1 minute to go.
In a year or two, but to lay out the expectation so that markets understand it. That's about where
what this is going to do is retest.
Likely to be at the end of 2020.
Here's the neutral resistance it's sat right on now.
That's well north of where their dot plot is, as you know. I wonder, Jeff, how you would think that the balance sheet reduction would play into that as well. Is that something that complements that effort, something that replaces it? What would it mean?
So I've been in the camp for a while of thinking that the balance sheet is kind of small here relative to funds rates increases. So I don't think the balance sheet, I think they ought to roll off the balance sheet and they ought to get about it rapidly and soon. But I don't think that that's
now,
major.
Up next is the open in just under an hour. So we'll trade that. Obviously we'll go reverse so we can just scalp gold just for now. We'll just see if we get a little movement. And obviously with gold on the open, we'll be looking to take buys. Now, it all depends where it's sat in that period of time. We've got to wait for it, obviously, not to be on a level. This is a resistance level it's on. So we're expecting this to probably dip down again a little bit. But say RSI is just held at 58.
I feel bad for
so,
them. Looking back at the last year and feeling as if the Fed didn't play its hand very well.
What can you elaborate on that, Jeff? No, I
Sure.
apologize for cutting you off, but can you elaborate on which aspects?
say margin level on the account, even small, is still 600%. So that's really good. You know, it's still.
2 or 3 things. First, they hamstrung themselves by placing them under this tactical constraint of.
Oh, brilliant, there you go. I just got another 2 sells there. Got another 50 cents. There we go. And again, that was just purely because we're on this resistance. I'm in and out. RSI dropped down, look, and I went in again. And there's there you go. 4 trades. And that was another 50 cents. And you've got to put it against, you know what I mean? It's a small amount of money, of course it is, you know, but this is just to show you percentage you can still get even on a small account, and you just relate that to a bigger account. So, you know, I'm looking for 10%, which is, you know, I'd like to get $4, $3 to $4 today, and we're already halfway already. We're $1.47 already, 4 trades, and we're not even at the open yet. So, you know, that could have been $1,000. You know, and it would be $147 up now. So that's how you got to relate it. And you don't trade in any different way. The only difference between the bigger accounts is you can just afford a bit more drawdown going down to a next level. But this shows you discipline and how to read the market. Say that we've got a zone now, blue zone. These blue zones here, obviously that means we end any buys we were in. If you was in a buy here, see it hit that level there, look perfect. That's where I said it would come down to.
Jeff, this is a delicate question because we speak to all these people with immense respect. But I'm going to suggest, Lacker's never heard me say this, Krugman and Lacker are on the same page, that we've got to go back to a much more traditional economics. And Jeff, for you, that's Wisconsin 1970 economics, which was one of the leading departments in the world at the time. Is the regret of the Fed?
So $2 will be 5%. Yeah, if we can get $4, I'd like to get more. Let's see, there's enough news around, but we'll just watch this on gold now and see if we get a retest, either a bounce off our neutral line, average line here, in which case we can go for another buy. Breaks over the flat line here, as you can see, then we're looking for sells. See, it's pushing down, look. And this is going exactly as we said it would, you know, reverse to the news. The news was bad, and you'd expect gold to go up on that, but not.
Last year would have been and the ideal time
mark this. That's the candle. That's the one.
engage in that. And the
This is
second
what you got to
thing
do, like I say, is mark all the news events and then have them on your chart for back testing, and then you can see
persistent and transitory rather than putting all your
You know,
eggs in the transitory basket.
whether they work or not.
That took preemptive rises, rate increases off the table. I think
See if this pushes down a bit more. RSI.
Is this a failure
What do you want?
of ex-post monetary policy? After all that effort to shift in that direction, are you saying it's
And always leave yourself some room in case the trades go wrong, especially on the small accounts, so you can leave the ones running and then counteract with a winning trade the opposite way. That's kind of how you should do it as well. So it's been green. We've had this bearish divergence, which indicates which comes on the chart, which is also good. I always take 5 candles, 1, 2, 3, 4, 5. That bottom.
Sorry about that, bro. Phone call.
I think
You okay?
I think they can.
Yeah, I had to take a phone call. My bad.
All right.
But I think
No, we're $1.47 up already.
the next meeting they'll release.
Yeah, I
So-
took that sell from the neutral zone on gold and clear 171.
That's an
Brilliant.
opportunity for them to.
Well, we've got just saying we've got the bearish divergence as well, and counted 5 candles from that. 1, 2, 3, 4, 5 as we do, and it's spot on. And now we'll see if gold breaks this. Yeah, it's going to go down. The heavy support. We can get another couple of sells away here. But yeah, the trade
Back
balance,
down.
the juice was bang on. You know what I mean? We just went the reverse. Always go the way of the news with gold before the market opens. That's our strategy. That's what we try and do. I mean, the whole thing. The good thing was we had everything. We had the wholesale inventories and the
All
trades
the same
balance.
way.
Yeah.
Yeah. So ideally, what we like to see here out of gold is to come down, sit on that heavy support zone, form the center legs of the W, and then on the open, we can trade the rise. Ideally, that's what we would like to happen. We're going to watch and we're going to pay attention to the indicators in our charts and price action and confirm that before we take any more trades. But that's what we're anticipating. And it looks like it might be rejecting off that trend line. So we may be forming the middle somewhere closer to the neutral and then breaking through on the open.
Let's go to those so-called fantasy land forecasts. The dot plot for the Fed, Tom.
Look at the see, that's the level. You can see the flat KG line there. Look, that's the area it's got to break.
Yeah.
Then, like you say, hopefully the W will form. The center of the W will form on that level there.
You know, the what if and the what of the past. But
$531 for the day.
Awesome.
The immediacy of 2 p.m. this afternoon. John, if you recalibrate the dot plot halfway to 4%, it's a whole new discussion.
The kind of thing we're looking at, and then we can look at gold then going the way of our trend line.
Of this lowflation kind of environment, right? Because a lot of people think we're going to go back to that.
Depends on the news. Again, depends on the upcoming. It depends on the Fed decision. This is a good thing to trade.
By recent history, and that something is
It's breaking now.
What has materially changed?
That sounds like the Bramo argument of the last 10 years, doesn't it, Lisa? We're getting closer. Getting closer.
All right,
They're
all
almost
right.
there.
Low blow. Who are you promoting?
No, I'm being deadly serious.
No, but I wonder how much this is an international discussion about China as well.
Kathy Jones of Charles Schwab's going to join us on all of this on Bloomberg.
Probably hope I stop driving on the shoulder.
Futures higher, up more than 2%.
RSI back up to 43.
Up 1.5%.
Pushing up.
Brilliant lineup a little bit later.
Down 44.
The Fed decides. Bloomberg surveillance. The three of us on TV, on radio from 1:30 Eastern Time.
In grey. And back up.
With the First Word News, I'm Ritika Gupta. The Federal Reserve's in the spotlight today. At the end of their two-day meeting, policymakers are expected to signal plans to raise interest rates for the
Gonna
first
push
time
down
since
again.
2018. That rate hike is not likely to happen till March. The Fed's trying to contain the highest inflation in 4 decades. President Biden has ramped up the effort to
Caught the
deter
wick on that one.
war.
Yeah.
Says he would consider
Dirty bugger.
personally sanctioning Vladimir Putin if the Russian leader orders.
It's a nice candle, though.
Ukraine.
Beautiful
Biden
rejection.
has already threatened some of the most severe economic penalties the U.S. and its allies can muster if Ukraine is invaded. And Intel has won a historic victory in its fight in the European
If it pops out, red again, I can get a sell in because it'll come back down to that support, minor support zone again.
With a record $1.2 billion antitrust fine.
Like I say, these are the ones that always get respected a lot of the times, the minor support and the heavy support, minor resistance, heavy resistance, and the neutral. You can take all the other lines out if you want. We've got 50 seconds left on this candle.
Probably rubber stamp a hike of 400,000 barrels a day for March. Oil is trading at close to a 7-year high. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Like I say, I'm happy with 147. Just sat here waiting. We get another move. We can take another trade, and we've got the blip at 15 minutes. The 2 p.m. I call it blip. 9 a.m. New York blip, where you usually get a move of some sort opposite for a few minutes.
And up we go.
Yeah, pushing back. Gonna hit that resistance again. And probably look to take a sell from there. Not gonna. I doubt it's gonna break it this time.
Not on center leg. I think it's going to tap 1847 and then pop back down.
Do you think that electric vehicles could reach 10% of the American market by the end of this year?
5 pips gets me 50 cents.
Like you said, because it'll be both, not only demand, based on the demand we are seeing for our vehicles, and the rest of the industry is seeing, it feels like the demand is certainly there. But the question will be how quickly can we, all of us, execute to build capacity to meet that demand. And that's what we are very busy doing. Within next 24 months, we expect to get to about 600,000 battery electric units globally. And that's before our bigger investments that we're making in Kentucky and Tennessee, both for battery.
Watch this. It's good to watch.
They don't come online until about 2025.
I was explaining that this morning. There's a lot of watching and waiting. We went back and we back tested yesterday, and we found 3 trades on DAX during London, and I think we found 4 or 5 trades on gold during London. Just strictly by the rules, by the strategy. So we found 3 on DAX and like 5 on gold, and then fast forward to the New York session, we got 2 or 3 more setups on DAX, and then we had 6 or 7 on gold. And the reason that I was going back and I was back testing is like, these are the areas that we're looking for, and this is the strategy. But there's a lot of sitting and waiting. I mean, a lot of people think scalping is, a lot of work in and out. But in order to scalp profitably and, to turn it into a profession so you can do it professionally and make income with it, you want to pick out these ideal setups. And that's the one beauty of the axe trading system and the strategy that we formed around it, is it helps you identify highly probable setups that you trade.
Furthering humanity's mission into space.
Perfect. Yeah.
If we want to have successful human missions to Mars, we are going to have to
took profit at 1847. It's another $71 in the bank.
The place where we are going to learn to do that is on the moon.
Cool, cool, cool. I'm waiting for the sales now.
Yeah, that's what I'm waiting on. Just popped in a little cheeky buy back up to that neutral resistance.
You have a world of young people that want their own financial.
And if you do trade aggressive, another thing that I was explaining, if you do trade aggressive, trade it to get a little green and get out.
And I'm a big
don't hold on for that 10 pips or that 20 pips. Get your little green, get out. And then whenever you identify your setups that are called out by the system, or that you use the system to analyze for the perfect setups, then you go for your 10 pips.
we live on a
That's how we
finite planet,
consistently do
only a certain
10% a
amount of
day
cheap oil,
on an account.
cheap nickel, cheap copper, and we're beginning to hit some of those boundaries. So
Yep.
we're going to live in a world of bottlenecks and shortages and price spikes, and we have to get used to it and learn to manage our way around it.
My immense affection and respect for the gentleman from Boston, Jeremy Grantham. It is Grantham
Now.
Oil and Autoload, GMO, and a good conversation here. Front Row Wednesday at 10 a.m. That will be on the terminal for Global Wall Street. Whether you are, like Mr. Grantham, cautious or not, it is truly must listen. It is also must listen at this time of day, 8:48 on a Fed day, when after Jeffrey Lacker considers 4% inflation, that Lisa and I should parachute in William Kennedy. Will Kennedy is in Houston with our leading Texas oil team. And we're
Pulling back, you see, dropping.
We're near $90 Brent. Is that an important benchmark, Will Kennedy?
Yeah, I think it
It
will
is.
be quite a signal to go through 90 for the first time since 2014. 8 years, Tom. I think it will get people talking about
Doing towards $90, so we'll look forward to trading the oil later. That should be interesting.
Yeah.
back up the political agenda again.
We've got 10 minutes until we get the blip.
Time we were up here at
Yeah,
something in
it's
the
a recent
vicinity
high
of
for oil.
$110 a barrel for a good amount of time. Is oil elevating up near 100 and 110 for the same reasons as last time?
We can get 237 pence winners, that's another dollar, so on the sell, let's see, set a level. Yes, done it, there you go. Brilliant, did it. Got 39 and 38, say $2.51, look, yay, that's what I like to see. $2.51. Let's see if we can get any more, let's see if it's going to drop a bit more.
Decisions on capital allocation and whether we should keep investing.
Oh yeah, look at the drop, come on. Push, 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 push.
Time when demand is recovering strongly, and that's why we're seeing these elevated prices.
Few cents, and I'll wait then for the 2 p.m. Oh, look at that for a drop down. Beautiful, bros. Hit that level.
Demand are people pricing in when they start looking at $100 a barrel?
Broke our trend line. Now it's going back up. Now it's going back down. Up. I love it. I love it.
Yeah.
The drivers of oil demand, chemicals especially.
I think we're going to get 1844. And like you say, form that centre W before we end up going back up for the open.
A lot of people expect we'll see record oil demand globally this year, above 100 million barrels a day, and that's not something that everyone thought we'd
Sat on that line.
quickly. If we think about 18 months ago when prices were, or almost 2 years ago when prices had.
Yay, brilliant. Got another 2 trades. Awesome. Hit that level. Hit the support. Look at that. As we said. Yay. $3.50, bro. Look at that. We're 10%.
Good job, bro.
There it is,
can,
look.
see if we can bounce off that support zone, 1844 area.
There you go, everybody. Just to show. And I'll put that into the group. There's our trades. And we've been trading.
I think that the big publicly listed shale producers are still under a lot of
30 minutes and we're 10% of our account.
to concentrate on returns. I think
Job,
private,
bro.
smaller companies, private equity owned companies.
Looks like it's holding 1844 pretty well.
They are, when they can get access to capital, investing to.
We started, like we say, with $30 and we're $3.50. So there you go.
We're going to be making a lot of money, and I think we will definitely get more shale oil this
You're almost to that chicken tikka masala tonight.
Hey, it's coming my way. Don't speak too soon. I'll probably blow it.
Knock on wood. Knock on wood.
I'm going for a rump steak tonight. I need 6. Well,
Is America ready for $5 a gallon gas? I mean, is that where we're heading when you sum in all of our research in Houston?
I mean, I think it's possible. I mean, obviously.
I think I'm gonna have leftovers tonight.
Now, I mean, I think looking at most of the stations here, they're just about $3. But
I'll save my Forex money.
Parts of the country, but it would be a huge shock. Of course, it would. I think that.
Well, at least we're going to the open with a bit of money in the bank, and depending on where it's sat. So pleased with that.
Electric vehicles around the world.
Now we've got 7 minutes till this blip, so we'll keep watching and see. But we said, look at that, how it retested, hit our heavy support zone. If it breaks here, we could go in again. But it's just sat where we tested before, so you've got to be careful. You don't want to jump in just yet. You've got 8 seconds left.
I seriously doubt we're breaking here. It's holding 1844 pretty good. 1844.5, 1848. 70 area, yeah, see smaller candle.
As we get past 90 and if we get towards 100, I think they're going to come under huge pressure from the US as they did last year to try and do more. You know, they will be speaking to Riyadh, to Abu Dhabi, and say, can we do more? I think the market, one of the problems the market's focused on now is that there's not that much more that...
We're going to try and catch the buyers on the open now. That's the plan.
Summer at this rate, back to very close to maximum production.
Say, look, yeah, it's respected it again, look. Sat right on that minor support. Just inside.
But Washington and the rest of the world should be really concerned about not using that up too quickly. That is the buffer the world has to, you know, and we're talking about crisis in Ukraine at the moment. That is the buffer.
It's just a shame I couldn't trade the oil with a small account, but you can't do it on IC markets. It's way too much. And also you've got the spreads are crazy. We've got, like I say, we've got the open, then we've got the new home sales news, and then we'll switch and go to the crude and the gasoline. My new favourite, XNG, is the ticker on IC markets, and we had a good win on the gasoline last time, so only the second time I traded it, so we'll try it, and then we'll be back for the Fed. Trying to break, bro. RSI's 41. Where? See, look how good this is when you drop the line across it. Look at the peaks, the last peaks on RSI. Look at that.
Yep.
See? Hit it, retested it. Hit it, retested it. So it breaks it. Here we go. Look at that.
Do we really see some sort of economic boom to support
that's a hell of a reach. It's going to bounce off 1843 though, for sure.
Can we see this inflationary trend before we get some sort of slowdown, before it becomes a
could have got in on a sell there. Could have got in on another sell.
JP Morgan says we're there. They're modeling 1-2%.
Broke it, 37.
No FOMO.
No. Protect my account. I'll only take a sell now if we go down to the 25 zone. You're going to break all this. We're, like I say, we're sat on heavy support. Got a breakout zone here. It'd have to be down here now to warrant it, because we know ideally we want gold to reverse in the next 30 minutes. So, but our analysis was spot on for the goods trades balance.
It's a fascinating meeting.
And we're trading a range. I mean, look at this up. This is what I'll break out. This is what you get as part of the system. You get this green and red dotted lines, which are the zone, the range that we're in. And you can see we've been trading, scalping a range. There's no real move on gold. Hasn't been since here. Come down, retested, just bounced up and down a bit. And we're still making money from it. That's the...
There's no real move in certain people's opinion, but I'm here to tell you there's 5 10-pip trades right there, back to back to back, and this is in a range. It's beautiful. I like it.
You could have gone in for a sell. Look, you could have done it. You got 2 blue zones now. Very risky.
Yep.
You've got
not enough space down there to be taking sells.
6 pips. Look, you're only going to get 4 pips. So, like you say, no FOMO. Just wait. We're waiting for the leg to form. Forms a cheeky little M. Look, you can see now. Look.
Yep, little one. Really tight.
And a bigger W. Let's have a look where the markets are. Post that. Index we need to see. And you can see NAS, look at that. NAS is really low.
Looked like DAX was trying to rebound this morning from that huge sell-off on Monday.
Soaring energy prices and a short supply of key chemicals that produce synthetic fertilizers are sending...
Let's watch US 30. I can't trade it, but let's watch the US 30 because you've got 2 minutes. Just see if we get this blip that we get on US 30. Just going to switch to it. Look, there we go. Which is, it's in a range as well at the moment, but oh, look at that. There's 300 points to the top side, and there is a potential if it breaks that of more than 300 downside. So yeah, the newt's right in the neutral zone. Got 2 minutes to go. Let's just see if we get the usual 30 minutes before the open.
Recent price spike could mean more farmers going organic for the long term.
Pulled off at 1843 pretty nicely on gold.
I'm going to see. Got 1 minute to go. Get a move. I'm going to put an arrow on it. Call it the 9 a.m. Oh. Nine a.m. to 2 p.m. blip. Let's see if we get anything. And I can't trade it because I'm obviously you know, using a small account, but I know there's a few guys who do like to trade this move.
Noticing in that is ESG is now the buzzword literally everywhere. It is definitely the topic of conversation.
There you go. There you go. There you go. There you go. There is. Look. Look. There it is. And move to the downside. Look. Bang on. 2 p.m. Look. And 2 dropped. Always a move. That's 10 pips.
Your equity market is
So should we test that so you could put sell in? Let's see.
Good morning, good morning. We are higher on the S&P by 1.6%. The countdown to the open starts right now.
Yeah, there it is. Countdown to the open. Everything you need with Roy and Justin.
This is
it, brother.
With Jonathan Farrow.
By now to the news, 30 minutes to the open. Yep, gold, like you say, sat on that support.
Popped all the way back down to 1843, and now it's going back up again.
From New York, we begin with the big issue, counting down to Chair Powell.
Those last 3 candles, it's been dinging off at 1843 and shooting way back, as you can tell the rejection on those wicks.
There you go. Look, there's that move. Look, you could have got a buy or a sell on US 30. All right, on just if you just put it in, you know, I might try a pending order. I know it's stupid. I don't like pending orders, but tomorrow or day after, I might try it. You could put.
Careful, it'll bite you.
You could put 10 pips either way. Look.
That's not a foregone conclusion. Powell is going to come out.
Fraser, like 30 minutes before, just loves to do this. I mean, if you took a sell, you'd have got at least 10 pips. If you took a buy, you'd have got at least 20 pips.
Doesn't have to move as aggressively as the consensus is starting to believe.
Marina usually trades that.
Some of the extremely hawkish economists.
As always, a fantastic panel right now. Joining us, Morgan Stanley's Matt Hornback, Pete Jim's Robert Tipp, and Kathy Jones of Charles Schwab. Kathy, let's start with the recent volatility in this market. Will the Fed respond to this in any way, shape, or form?
No, I don't think so. Volatility is to be expected when the Fed moves from really super easy policy towards less easy and talk about tightening. But so far, it doesn't seem to have spilled over into the real economy, and their focus now is on inflation. So I don't think they'll respond to it at all at this point.
No buys yet. It's still selling. Still, we want it sat on this heavy support for the next 30 minutes and then just wait. And again, it's what we were saying yesterday in the group. There's a lot of waiting, even on a 3-minute time frame. You think you're going to be jumping in and out every 30 seconds, and you'd need to be on one of those, 30-second ticker, time frames to do all that kind of thing. It's even on 3 minutes, you've got to wait for the setup. You can't force anything, and you've got to take the better quality trades.
For the Fed a little bit later.
RSI now 32, and obviously if the RSI comes down into our zone here, look, goes red, we can take a cheeky sell, and it'll be an in and out one, nothing major, 5 pips or so, before we look to take the buy on the way back up.
These days, I choose probability over possibility.
Do we get about what comes after the March FOMC meeting? Are we talking about a Fed that's going to be raising rates 7 times this year, right? Are we going to be talking about a Fed that hikes rates at every meeting starting in March? or are we going to be talking about the Fed of 2016, 2017,
Goods trades balance.
2018, where they were hiking once a quarter only? That's, to me, the real question here, John.
Now we're sat right on this support, so we've got 2 minutes. We'll just watch this candle and see if it breaks to a breakout zone and then bounces, or whether we put buys in now, we'll wait to drop to the next level. Like I say, with a bigger account, this is the kind of thing you could be thinking about, is getting ready to put the buys in, because you've got a good idea it's going to bounce back up on the open, but it's where you take it. Like now, look, it's pummeling down even more. 29 RSI. If it breaks this zone, then we're going down. And as you can see, the ACT system has updated, and now the heavy support is 1839 and your minor support is 1841. It's realised, and here's your heavy resistance zone, exactly the same, you see. So now it's the good thing about the system, it updates as price action moves. So see if we're going to get a bounce off here, because we're right on our neutral pivot for the day, pivot point. Basically, this is what this zone is. If it breaks this, then we're going down to that next level, and again we can measure out what we're getting there.
They managed to stay at the peak, and the reason I'm saying
Again, there's 127.
they tend to make mistakes. They made it last time with their
Price is
roll-off.
142.
So I think the markets right now have gone into an in-between point. They used to be very supportive of the Fed's stance. Now they're halfway in between. Yeah, they'll get a soft.
For me, because I've got a small account, I'm just waiting and watching and analysing. Like I say, if you've got a bigger account, you could be in on a sell on this, and you could probably put a buy in the opposite way as well, knowing it's going to come back to you in less than 25 minutes. That's the theory behind it, using the analysis.
Like to surprise the market. That's why the script seems to already have been written for people on trading desks. There's not going to be any change in the target today.
That's it, yeah. I mean, today, this is the thing. It's just a chat. That they're not going to change the interest rates or anything. It's just, I think it's just, is he going to say it's definitely March for interest rates, and that's what the market will respond to, but they're not actually going to change today. Interest rate's going to be the same, 0.25.
But that's unlikely. So then we get to the questions in the Powell news conference, and this is what the folks on the trading desks want to know. The rate rise, how far, how fast?
See if that 1842 zone holds up.
Is it going to be March? The balance
There you go.
sheet
That's
when,
what they need to know.
How much? Best guess is he'll put it off till later this year. And the guidance, what
Rate rise is 4.
Fed use to know
There
whether
you go,
it
yeah.
is
So it's
still going, since we don't have to worry
1842,
about
respecting.
maximum employment or
It goes 25, goes bright red. I'm just going to get ready.
Fed's statement. Now, here's the real question, and this gets to what Robert Tipp was just talking about. If you look at this, the white line is the Fed funds rate, and every time they have significantly
Is it going to get a push down a bit more?
it has put us into recession, or let me say, a recession has followed.
Our size is going to be
Here's the other interesting
26.
thing. The blue line, that's PCE inflation. Notice, John, that every time the Fed has had to cool inflation, it had to move the Fed funds rate above the inflation rate. And look at all the way over on the right-hand side where the inflation rate
Obviously, we know as well with gold, you do get a spike either way on the open, but obviously we want to be looking to take buys. So the lower this goes before the open, the better. The way we see it, we're buying the dip basically.
That one held up. You're gonna have an indecision candle right here, or you should.
Yeah.
Just north of 2% for 2024.
Yeah, starting to pull back off of our breakout zone on the bottom. Beautiful. And then we still got headspace up to about 1848.5 in our breakout zone. So
a slowing economy in the second half of the year.
ought to be a nice open.
Also, the assumption is that inflation
Yeah.
will start to ebb a bit.
The further it comes away from the neutral resistance, the better. That's why I'm, because it will respect around this area. So there's only 85 points. So I would like it to fill this wick, come down, bounce off the minor. This is where I ideally want to be taking a buy from.
Mhm. Or let it break back up, and then if it's a shift candle, break in the neutral resistance, then buy back up with that shift candle.
The rate hikes will be an important component of how quickly we get back to, a lower demand economy.
Futures are all looking good, you see. So that could push
the possibility of QT in the second half of this year being the equivalent of 1.5 rate hikes. So that may take some of the pressure off the Fed funds rate going forward.
Robert Tip, can I get your view on that? We've heard from Bill Dudley.
Yeah.
He thinks that rates need to go north of 3%, maybe towards 4%. Jeffrey Lacker said a similar
When interest rates go up, gold will go up.
Robert, that's even with a balance sheet reduction of maybe $1.5 trillion from the middle of this year to the back end of 23. Is that achievable?
Right.
There was that blip, look, indecision, and then down on US 30. Look at that, perfect. Could have been on a scalp on that. See as he went red, look, bang, 300 points, damn.
Of some of those individuals, I think they overestimated how high the Fed
That was a good move, that was.
rate needed to be before they were at the Fed. They went into hibernation as a hawk while they were there, and they've come out and they're back on the hawkish side. That would be my guess. On Michael McKee's graph, if you notice, every time the Fed funds rate rose above the PCE, it did so by a smaller margin. So I think as the economy has become increasingly indebted, that level
Get another trade in before the open. If not, we'll just wait.
has fallen lower and lower. Number one.
Going to range for a little bit, innit?
Those other incidents of inflation were endogenous.
Back to
They were
gold.
the result of strong demand, to some extent in
Sat,
08,
RSI sat 28.
oil price environment. That's not uncommon when you have a strong economy. Demand is good, but right now supply is definitely crimped. And what the Fed is lining up to do is get expectations there to hike 4 times next year and to begin balance sheet roll off in the middle of it. Even last time when they did their rate hike process, they hiked at the end of 2015. They started in 2016. When they moved into balance sheet roll off, they were at about 1%. They skipped a meeting. They waited 6 months. And then they started raising rates as they're rolling off the balance sheet. And the next thing you knew, the primary dealer system was running out of money. So they have not been very good at estimating this, and they're lining up for a much faster process than what they had before. Is the economy really strong? It is right now, but where is it going to be when reopening winds down and the fiscal stimulus begins to ebb? So I think you're going to have a quieter end to the year than beginning of the year in terms of Fed bark.
Matt Hornback, that's what you're worried about as well. We start with an inflation problem. We start to talk about the solution, the policy response to it, and then you start to focus on the growth slowdown. Mike Wilson wrote a lot about that over the weekend, Matt. Your thoughts on that at the moment?
Down again, look a bit.
The back half of this year.
Gonna break it.
The first thing I'll say is Fantasyland is very hard to predict. And I think, thinking about the funds rate, thinking about what growth does in the back half of this year is very hard to predict. And I think even if we do get a growth slowdown, which by the way is not the forecast of our US economics team, we actually have growth doing pretty well.
This is going to get back to that minor support.
So, the equity market might be discounting some slower growth in the first quarter, but we think there should be a good growth rebound into the second half of the year. And as far as, the Fed raising rates, getting above 3% in this cycle,
size 27 now, pushing down.
Thinking about the debt.
Now we've got a minor support zone, we've got a blue zone forming. We could get a bounce off that very soon.
Is actually lower as a percentage of GDP today than it was in the great financial crisis. Federal government debt is a lot higher, but that's a good thing. That actually, in my mind, makes it more likely that the Fed can raise interest rates and that interest rates can be a little bit higher in this cycle than they were in the last cycle. Can we get to 4%? I mean, that's a tough one to call, but I'd say, do we have a good shot of at least getting back to a 2.5% funds rate? Absolutely, John.
Matt Hornback, Kathy Jones, Robert Tipp, sticking with us. Your equity market up 1.3% on the S&P, on the Nasdaq up a little more than 2 percentage points with the price action. Here's Abby.
John, not
So that 1842 area is holding up pretty solid.
Now, heading to the best day of 2022.
Yeah, 1841 now.
The biggest, of course, Apple. That's the biggest weighting to these indexes.
We got a support
right
zone
now,
that's
up about
formed right above our minor support area.
As the company tomorrow will be reporting its key earnings report. On the news also that the iPhone maker was the top smartphone maker in China for the fourth quarter for the first time since 2015. But of course, it will be all about earnings tomorrow. JP Morgan up 1.1%, in line with yields backing up, and then Tesla, the big.
Hey, I went in. I got 8 pence. I got 15 cents on that. On that little push down. There you go. I just nipped in and nipped out. Through micro scalping. Look at that. 8 pence. That's still 15 So $3.61 now. Yay! Before the open. That's it now. Sitting on my hands. 15 minutes to go. I just wanted to scalp that gap. I mean, that could be $50 for somebody else, but you know, just a quick in and out. 361. Happy with that. No positions open. So we just sat on our hands now, waiting.
For everyone.
That's up next. This is Bloomberg.
So pleased with that. Current week we're $12. $12 up. Yay. 50%. That's great. Get on for. In just 1.5 days. Let's watch gold again. There you go. Look, so I just scalped that. I just scalped the breakout zone down to the minor support, and then as soon as I saw that minor blue support was going to hold, guess what I did? Got out of the trade. And it is what it is. 20 cents, $20, doesn't really matter. You know, respect this zone when they appear. Now if RSI goes 25 and we see a break below, we could, there we go, it's in. Look at that. Just as I was saying. Perfect. Looking for this is we're looking for this for the open.
So it did change,
It's sold. Look at that, beautiful. We're down to our next points of interest lines. So I could have held themselves, but you know, I still got to win. Doesn't matter. I don't miss out on the foam. Now that the blue level's disappeared, look, telling you it's not a support anymore. And now, in fact, look, it's gonna, if it comes back up, it's now the resistance. You've got support and resistance coming back up now, which is how it should be. You know, support get broke, it becomes a resistance. Look at that on the RSI, perfect. It's gonna hit our heaven support just in 1839.
Yep.
Beautiful second leg M though. Look at that. It's just showing you. That's just.
We got home sales after the open.
Yeah.
Mercedes-Benz is on a path towards CO2 neutral.
That's a lovely M pattern.
We have flicked the switch there, and really, we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Beautiful, beautiful pattern. And then we're looking for a retest of our breakout zone here, not for the MY Open.
To break it down fast.
There is no muscle memory for this kind of economy.
The Fed's history is they break something when they raise rates too much.
Trust Bloomberg for the fastest coverage and exclusive analysis.
We are now setting ourselves up for recession.
This disproportionately affects your lower income households.
It's not going to be an easy one.
Bloomberg Surveillance. The Fed decides. Wednesday on Bloomberg. The fastest way to stay one step ahead.
That's a good thing. Like I said, the lower it goes, the more it's got to come back to us.
You know the legislative process. It doesn't move.
Expected heavy support zone at 1839. You've got bigger accounts. Some people would be putting buys in now, aggressive. Obviously, ideally, you want to wait until the RSI is coming out of the zone, wait until it's going into the neutral zone, wait until it crosses our average line, wait until it goes green and pops out the top. They're kind of your 4 triggers, and it's up to you. I don't tell you which one to trade. That's up to you which one you trade, but they're your trigger points in conjunction with price action on the chart as well. But in terms of the RSI, that's how I think about trading when I want to take a trade. And this RSI, and you can see what's formed. Look, the first square block of the trend line for going down. So we could have some more downside yet. This wick could get filled. It looks like it is doing. There'll be another 50 points, 50 pips here, but I'm so tempted to go in, but I'm not. I'm going to sit on my hands because the open is just 10 minutes away. So,
electric vehicles.
Discipline.
We heard from Ron Wyden yesterday, a key Senate Democrat, and he said when you look at the Build Back Better and you're trying to get some of these chunks passed, he thinks that wood could potentially go through.
Yeah, and so he said, oh, you could have held that. I mean, but that's the whole idea about this system. You've got the grid system to get us in and out, in and out, in and out, in and out, rather than risk exposure, one long trade that, yeah, happened this time, but doesn't always happen. So it doesn't matter. At the end of the day,
A White House official has said that
you know, I'm over 10% up on the account on our $30.
taxes on corporations, they do believe that the costs are worth it.
AMH, just quickly, there's a
And we just wait for the better setup. Taking a sell now right on a heavy support zone. It's filled it. Look at that. So you could have got another 5 pips. It's filled it, as I said. You know, a lot of the times when you get his breaks and you get the wick down and the wick up, it does then carry on in that direction, especially if you're looking at RSI into the oversold zone. Now what I want to see is if it clips our 15 line, that's when I like to look for buys on a bounce back. Form this center leg W you'd be seeing next.
At the White House, potentially the White House.
But obviously, you know, with the open, we could be looking at this level or this level. It doesn't really matter because I'm only going to be looking for 10. So yeah, 195.
He believes in these incentives, but not
I'll actually
if
just
they're
move this
going to
now because that
categorically marginalize
set it here for now. And again, we adjust it to zone, but that's what I'm looking at on the open.
Anne-Marie, thank you very much. Down in DC, we appreciate it. JP Morgan's Michael Ferrari weighing in on the inflation argument. I want to get back to this for this Fed. I've asked this repeatedly through the week. Has the Fed actually given up on the underlying argument of the T word? Yes, they've given up the T word, but have they given up on the story? This is what Mike Ferrari said.
T-word's gone.
The story hasn't already been completely demolished. Further evidence of building wage pressures, wage
the news.
should really put the final nail.
Wall Street eyes strong open.
Kathy Jones, can I
Fed decision looms.
Do you think this chairman has given up on the underlying argument around the inflation picture?
Microsoft earnings, yeah, the NAS. If you traded the NAS, this is what you've got to look at really. Probably going to be a buy on the NAS. Yeah, and if you've got a slightly bigger account. NAS is a good one, it's a small account, but not stupid small like the one I'm using today. But
the view of many of the Fed members is that the underlying inflation rate in the U.S. Once we get past the supply-demand,
it's always worth reading this. If you're trading the NAS is very.
You can see that in the market. I mean, if you look at the 5-year forward,
you know, it moves a lot more on earnings decisions.
The market is certainly believing that the underlying rate of inflation is going to come back down, and I think that that's probably where Powell is. But of course, they have to respond to the immediate rise in inflation right now. It can't afford to sit back and, you know, test the theory that it can take a bit longer and try to figure out what the time frame is. But I do think he's more dovish than perhaps the committee is at this stage of the game.
Matt Hornback, I think this is what you were getting at about 20 minutes ago. It's the glide path post-March. What does it look
so
like?
You should be looking for buys on gold and sells on US 30, which obviously I can't trade US 30.
Level that makes them feel a bit more comfortable about the current inflation outlook.
And we'll wait for the news.
Maybe they hike in March and May and in June, and then start the balance sheet normalization process, and then wait and see. Or is this the Fed that
beautiful? Look at that.
Like
dropped even more. Wow. RSI 16. Look at that. Is it going to touch 15 and be truly over sold? Bring our TP down because we don't want to be looking at this for the open. Could the neutral resistance just in now could be way back up here. That spiked down. Amazing.
A couple of months, I'm not so sure that applies.
1835.
But you know, if they really don't want to surprise markets
Ooh,
with the pace of
that's an amazing second leg.
Start to get some clues today, John, about what should come after March, not just at the March meeting.
Robert Tip, final word here in 60 seconds, sir.
Bouncing off the NAS 1835 heavy support. RSI is 13, so now it is seriously over sold.
Put the blame for inflation at the feet of the Fed. I think the main thing will be if they signal that they are going to
see if we can put some buys in on the way back up.
Forget it. This is going to be if the economy is burning hot 9 months from now. Yes, we will continue to
a
take
key
all
level.
Steps. But if we see moderation and if we see a soft landing, we're going to move to the sidelines. I think that's what the market wants to hear.
Size 13 could go to 9.8.
On the set it and forget it. They
have a quick look at US 30.
The same problems they had before the expansion of too low inflation and so on. So I think if he can keep it real, keep it focused on now doing the right policy at every meeting and not overcommitting on future guidance, I think that's
same.
The best course.
Robert Tip, Matt
I reckon that's going to drop a bit more.
Up on the program, the morning calls and later, why some at Citi and Goldman Think this might be a buying opportunity. More on that still ahead. Futures positive. 2% on the Nasdaq, up more than 1% on the S&P 500. From New York, we are 8 minutes away from the opening bell on this Fed decision day. This is Bloomberg.
Well, it's not looking good on US 30. It's looking like it's going to come down. But again, you always take what they say with a pinch of salt when you're scalping. So 300 points. Oh, it's hit minor support. You could get a bounce and a break, but I'd still be looking to take a sell on the open. See if it bounces up before. Go back to gold. Beautiful move on gold. Now look at this, we can adjust our level each time. This is what you've got to do, because you're just looking for that magical 10 points. The price is 1833 at the moment. RSI is 10. What did I say? I said it could probably get down to 9. I wish we were closer to the open because I'd be putting buys in, but you know, broken our heavy support. Zoom out, we can see that was the key level here. Look, so you're looking at 1830 could be, but I think it's just going to pull back. RSI is 10. Chance of a cheeky buy now. Yeah, and just go for 5 pips, 50 points, that's all. You're probably in $1 a trade, that's the idea with a small account like this. Hopefully it'll hold like this now for the next 5 minutes. And remember, I always put the trades in. The bigger account you've got, you can put trades in like 2 minutes before the open, because you sometimes hit TP before the open, which is a bonus. Then you can go again. If you've got a small account, you need to be entering, not entering until like 20-30 seconds before the bell, and make sure your trades are triggered away as well. 1 minute maximum. That's kind of how I've always done it. 2 minutes before big account, 1 minute and under if it's a small account.
Remember this, the last time the Fed met, December 15th, the Nasdaq 100 closed higher that day by 2.35%. When we got the minutes in the first week of January from the same meeting with basically the same story, the Nasdaq closed lower by more than 3%, down about 3.12%. Think about that as we see futures rise going into this one, up by more than 2.2% on the Nasdaq 100. The last time the Fed met, December 15th, the 2-year was just north of 60 basis points. There has been a monster change since then. We are through 1 percentage point on the US 2-year. Is that enough baked in? Are we really discounting what this Fed is going to have to do over the next couple of years? And how on earth do you discount how much Fed work this Fed has got to do?
We've got 2 buys. We've got 2 buys. I've got 30 and 32, nearly over $1. We're $4.44 before the open. There you go. I went in on that pullback, bought at the bottom there, and there you go. You can see, so you can see. There you go. The 2 trades, 62. That's about another $1. So we're $4.44 up on our account that started at about 30. So we're doing well. We're doing well. The chicken tikka masala is coming my way. And now we've got the open, so we're going to go again. Going to go again on the buys.
Alright, Roy, I'm going to have to leave you to it, brother. I have to go do some work, unfortunately.
This is real work.
I know. One of these days, this is all I'm going to do.
Are you gonna go? You're going in on the open though, yeah?
I think I'm gonna have to leave this one alone. I got 590 for the day, so I think I'm just gonna leave that on the table for you guys.
Yeah. Well, I'm gonna go another hour because I want to do the oil as well, and then I'll be back in the live group tonight for the Fed decision. I'm gonna do I'm gonna do a couple of one-to-ones as well. But thanks for joining me, Justin, as always.
Yeah. If I get wrapped up, I'll hop back in.
Yeah, brilliant. All right, you take care, trade safe, and see you on the next stream, bro.
Yes, sir. Always. Trade safe. Ciao.
Nice one. So we've got an indecision candle. We're like 1 minute away from the open. And what I might not do in this one, I'm not going to set any preset levels. Just going to let it fly on this one. See a nice spike up and down. If it pushes down lower, fine. We're only going to lose about $1, about down to here, and then I can buy it on the way back up again. Obviously, if it breaks this blue line, blue support zone, obviously I'm going to look at taking sales and ending my 2 trades in a loss. But otherwise, I'm going to hold and try and get 4 positions away. We'll see. We're 1 minute away. Let's let 2 fly and see what we get.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way.
See what kind of price action we get. Let's see if we get a spike up to our level here, which is 1838.68 on trading view. Yeah, we could get a push down before a push up. I'm not going to panic and end. I'm in profit already for the day, so obviously I know this is the key level. If the price breaks and finishes below this line, then you end on a loss and we look at taking further sells. Obviously I'm looking for a correction from this second leg M now. Let's see if we can get a decent win out of it. We're about 30 seconds away from the open. Good luck, everybody.
Or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way.
Open is open now.
What kind of material we would need and what quantity we would need.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that
See if we get a push up. We get a push down.
Let's look at where we are on the year.
Yay, we're done. There you go. And we got yeah, we got $1.35. There you go. And just our little push up. It hasn't even moved yet. That's perfect. On a little account, that's great. That was a nice win with $5.88 now. I'll just flash and show you that. There you go. There were the 2 trades, the buys for the open, as you can see. Closed them 40 seconds after, and we're talking 65 and 45. So like I say, about $1.35. So now I'm $5.88 up for the day, which we're getting on for 20%. Still got the news to come yet. And again, we go back in, look on this buy, going to push up.
A lot of work to start the year in the FX market. The euro showing just a little bit of weakness again against a stronger dollar. Euro dollar down to 1.
See if it's going to push up again.
Almost a tenth of 1% there.
If not, we'll just wait now for the next news to come out.
Rallies back on to 86.40, up about 80 cents on the day, up 0.9%. Around the open then is the rebound you were looking for. 45 seconds in, we're up 1.5% on the S&P. Information technology top of the pile, big move there, higher by 3%. At the bottom, underperforming. Consumer staples down.
See if it drops down. RSI 27. It's just come out of the zone now, which is what you wanted.
A ton of volatility.
Going to hit. Wanted to hit this level.
Is it time to dive into
that 1838 level?
I don't think quite yet, John. I mean, I'm looking for the Fed to actually begin liftoff to sort of usher in an era of perhaps modestly less volatility than we've experienced in January. Like, our base case expectation is that Powell is going to sound a lot more dovish than some of the extremely hawkish economists who've been upping their forecasts over recent weeks and since the start of the year. But that may not be enough to completely calm the market.
Back with us, Matt Hornback, Kathy Jones, Robert Tipp. Robert, I want to come to you. It's something Lisa and I have talked about.
Brilliant. There we go. And we've got another 2 buys there. It hit that level. Got 28 and 25. So nearly another $1. So we are $6.59. Here's all the scalps I've done. That's all the trading since we've been trading about an hour. So we've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 trades, 8 positions because I trade 2 positions. And we're now 20% up for the account for the day. We're on $6.59 profit. And so yeah, well chuffed with that, and we've still got the news to come in 25 minutes time. So That's how you scalp. It's just nice and smooth scalping, just using price action, using the news as the momentum to give you an edge for the open as well, and not being greedy, and doing multiple trades, nice and steady.
I mean, we've seen a tremendous volatility in January, so hopefully we're not going to see this kind of level of volatility.
Like I say, I don't use anything on C-Trade or IC markets to analyze. Everything we do is all from what your view. So there's the spike up for the open. Now RSI is back in again. If it breaks this level, obviously we can go for a sell. Continuation of that second leg, and you've got your support zone here.
Last time it was repo.
There was the MY open.
But illiquidity, at any rate, market volatility tend to go hand in hand these days, and I think that's what the Fed is going to.
It's great when you start recognizing these spikes, and I could just put a line on them without even looking at the time and go the open, close, news event, whatever, you know. And rather than just ignoring these spikes, I thought I want to make money from them, and that's what it's all about. You know, a lot of people are probably selling and are selling now, but I just wanted to capture that buy, and we did it. It's hit our trend line now, as you can see, so there won't be any more buys until we get a break of the trend line, but we're sat on heavy support. It's going to bounce between here and here for the time being, so this is where you avoid a trade, really. I mean, I know there's 20 pips on the table here, but RSI is going up, it's going down, it's staying oversold. Wait for it to push down past the heavy support zone, the extension, and then bounce back.
Where something might break. We're still trading in a very healthy environment. And John, let me just
everything's still quite positive. Let's just have a quick look at US 30, and there you go. Look, there was the open on US 30 and drop down. Just had to wait 3 minutes. So again, I said if you were on US 30 you should be selling because the news pre-market was bad. And there it was, that was spot on. And you could have got, you'd have got in on that candle here, look, 27, and yeah, it went against you, but then bang, in. Just hold. You know it's going to drop.
Right now, from what we can see, that there's a liquidity problem. Obviously, if the Fed
you'd be well frustrated if you'd ended the trade here. Because where will your stop loss be? I mean, this is the thing, you know, you're putting a short in on that candle there, which is the top of that candle. There you go, bang. So, and where's your stop loss going to be? Well, there's the flat KG line. There's the, so it would be just above that blue zone, and there would be your trade. So yeah, it's draw down, but look, got yourself nearly 100 pips. You could have. I'd have been happy with 10.
Slowly trying to drain liquidity, right? We've had very buoyant markets, particularly in the credit markets.
Again, that was spot on. No reason to end that trade. Nice.
Some volatility there, but I don't think that we're near, as Matt said, a breaking point where it's a function problem for the Fed.
5 minutes into this one, let's call it 6. We are higher on the S&P by more than 1%.
And they're not even mentioning the goods trade balance news on Bloomberg. They're so obsessed with the Fed that they're not, you know, not even considering that, which because it was a high impact news event.
Year to date, many people lining up to say let's buy the dip. Peter Oppenheimer at Goldman with a nuanced view on this. He said any further significant weakness at the index level should
buy the dip.
A buying opportunity. There is a but here. Look out for the growth risk. With more, here's Abby.
Well, John, it's an interesting question for sure because the sister to buy the dip is sell the rip. So until there's an all-time high, that may be the case. But today, the dip buyers do appear to be out. We have the S&P 500 up more than 1%, as you were mentioning, the best day of the year. And interestingly, over the last 2 days, it felt like the S&P 500
Gold was still waiting for the buy again. We can go back in on a buy.
The last 2 days, not so much.
The support is holding up. Look, 171.
From its all-time high.
Got 22 minutes now to the new home sales news. If you click on this December and you've got the month on month, then obviously again we want both of these news events to be the same direction. They usually are, but not always, obviously. And again, higher than expected figure is positive for the dollar, therefore bad for gold, and vice versa. So again, it's all there in black and white on many websites, you know, not trading anything secret, it's all there, and they even give you an indication of what you should be looking at. What we need is an indication of what levels we think it could go to, pending the news, and this is what the AXE trading system does, these levels. So we're going to wait for this news.
Let's see what happens.
And
after
then
this
we'll have a quick
meeting.
coffee, and then we'll have a look at doing the crude oil and the gas again. And I haven't got a clue what's going to happen with this. This is all live, and I'm going to trade the gas XNG on IC markets with the bigger account and see what we get.
John, because we got the strong top and bottom
It's
line.
going to be interesting.
To this week of all weeks, really, with the mega caps, Microsoft being the first, we knew that a beat on the top and bottom line wouldn't be enough. They wanted to see the outlook, and if we bring up the kind of key takeaways from Microsoft's earnings, that's exactly what we got.
Sell the rip
for the current quarter in terms of Azure sales growth will be rising significantly, and that really
again, no buys yet on gold. It's still in that zone.
because they did have strong growth. Coming into my Bloomberg
My favourite positions are when, like I say, the RSI comes out the zone, you take a quick cheeky buy, it comes back in, you go back in on the sell, then eventually when it's spent so long in the red, you will get a retest of that average line, and here's where you look to take the bigger buys. This is where, if you did want to change your lot sizes, you'd put higher lot sizes in as the RSI comes and goes out, until you've got your big winner once it comes out the zone there. That's again how I use the RSI to trigger my trades. At the moment we're strong bear, we're 85%, 70% now. Rejection off this zone.
And just start thinking about the fundamentals. How strong are these businesses, and what is their growth outlook?
Daily volume's 50% on gold, so there's still a lot of movement to go. Market is declining, bearish and falling, so it's still, yeah, if this news is good on the home sales, which is predicted to be 76 over 74 for last month, but month on month the figures look really bad overall for the year on year. Could be up. So if this is good news, then obviously we'll look to take a sell on gold.
About a quarter of the Nasdaq 100. Microsoft makes up a little more than 10%. So think about that move in Microsoft as you look at the Nasdaq 100 this morning. Microsoft up by almost 5 percentage points, and the Nasdaq doing nicely too off the back of it.
Yeah.
Final word now from Matt Hornback, Robert Tipp, and Kathy Jones. All three of you are across credit to some degree, some greater than others. And Robert Tipp, I want to start with you. I want to gauge where you think things are, just in terms of corporate fundamentals, where leverage is, what the maturity profile looks like more broadly as we start to enter what looks like a big rate hiking cycle. What do we look like, Rob?
Yeah, I would say the corporate sector is in good shape. I mean, the upgrade to downgrade ratios are very strong, and they've had a very high issuance, buoyant market to reprofile maturities. There are virtually no defaults last year in high yield. So it's been a very strong credit environment, and I don't think the central banks are going to take enough of an edge off the economy here to really dampen them. And those underlying fundamentals are there for structured product as well, by and large. So very strong underlying fundamentals. Now, spreads have gotten incredibly tight, but I think what we're looking at is a range-bound market for spreads. It's going to be a bond picker's market. But on average, as we go through this, I think your long rates probably remain range-bound on the Treasury market. Your spreads remain relatively range-bound, and there's a lot of bottom-up opportunity. So I think a reasonably good environment for credit, and that usually, is the case on the credit side at this point in the cycle, and it's also often the case in these recent cycles. The long rates also peak early in the Fed cycle.
Very interesting. You can see, look, there you go. Gold pushing down again. RSI 19 is on this level of support. Not jumping into any trades at the moment.
Agency mortgage market in the U.S. The type of spread widening.
We get a touchdown here, then we could be looking to take a buy back up again, like we did here. Retest. Well, I don't need to take a sell now, really. If RSI came up and come back down again, we're looking really ideal. I want to take a buy on the way back. We still want this W to form. Like I say, it could be from here, here. It drags along our trend line, dropping down again for a retest. Then you can wait for the second leg, play back up to our breakout zone. Again, news dependent, but you can see there's a lot of resistance here. So the chance of 1842. So that's what me and Justin usually think in terms of patterns.
We're facing the Fed decision today.
Kathy Jones, final word.
Yeah, I think the corporate fundamentals are very good for credit. We've seen a little bit of spread widening, but not very much. They're really hanging in there pretty well. I think if there's one thing that concerns us is that in every tightening cycle, you find out, where the weak spots are. And in high yield, one of the risks to us is simply that investors pull out, look at more attractive opportunities with less risk. And so, we're worried about the level of tightness in spreads in the high yield market vis-a-vis the tightening cycle. So that's where we'd be a little bit more cautious. But in general, credit looks pretty strong.
Kathy Jones, Robert Tipp, Matt Hornbeck on this Fed decision day. A busy one for us all. Thank you so much for giving us so much of your time.
It's redrawn now, look, because it's breaking lower.
Up a little more than 1% on the Nasdaq, up by 1.7.
Get rid of this.
Coming up on the geopolitics, the president rolling out American forces in Ukraine.
There is no intention or interest or desire by the president to send troops to Ukraine. NATO is a forum to support our eastern flank partners and countries, and that's what the focus has been on.
That's next. This is Bloomberg.
Zoom out, you can see. Always zoom out if you're unsure. Look, you can see the key levels. Look here. That's where it's marked up. This is where our AX trading system comes into its own, giving you zones to look for. Key break. 1, 2, 3, and now this could be 4. RSI 19. And again, if you had a bigger account, I'm in on a sale. Look at that, yeah, perfect. RSI 18. Trend bar is still red as well, but this has got a good chance of coming down to this level.
Access
200.
the financial world on demand. Hear from leading economists, policymakers, and industry experts.
It's so crazy to say we took buys on the open, but we did. Because that's our system, that's our strategy. That was that new spike, that was that spike there. There was the NY Open. If it makes you money, it makes you money, that's it. Oh, now look, we've had form. This is what I like to see. Again, live, look, you see, here's our blue zone, which means this is a previous, if you scroll left a lot of times, this would be a previously tested zone, a reliable one, more historical than the grid. So if you were in a sell from here and you saw this zone form, you end the trade. That's it, because it's going to get respected, and as you can see, it is. And again, a lot of people would be putting buys in now, just trying to scalp 5 to 10 pips on gold. Me, I'm just going to wait for this news. Need 10 minutes away. Then it's time for a coffee. We've been going 2 hours. Time to top up the coffee.
Nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
See it spiking, look, pushing up off that RSI is 24 now. Going to come up that zone 25. If it goes back in, we can take a sell, but we want this to be a buy. We would like to go buy. Especially if the news is worse than expected, then this will push gold to form our W. You want to do.
Forces in Ukraine, but as I said, there are going to be serious economic consequences if he moves.
President Biden considering sanctions on the Russian President Vladimir Putin should Russia invade Ukraine. The UK mulling tougher actions of its own, with Foreign Secretary Liz Truss telling Sky News the following: "We are not ruling anything out. We will be bringing forward new legislation to make our sanctions regime tougher so we are able to target more companies and individuals in Russia." In Washington, Bloomberg's Anne-Marie. Hey, Anne-Marie.
Hey, John. Well, when we look at the sanctions picture across the transatlantic, this is really the heart of some of the tensions we are seeing, and especially when we look at what's going on in Germany. According to Bloomberg documents, Germany is trying to have this
11 minutes to go, 10 minutes to go, and gold, as I just said, has pushed back. Look, you see, beautiful off that blue zone. This is where, as an instant scalper, as soon as you see these zones, you can quickly put in a reverse. Now, they don't always, because remember, these zones do disappear. They will repaint. You know, if they don't hold up the zones, once they're set like this, you know they'll be respected on the way back up. But like this one here, if price came down and this broke, this would disappear. Obviously, it's not a support level anymore, major one. But when they stick like this, a lot of people, you can just go the opposite direction, get in, get out. You know, you're not going to hold, but again, it's another true scalp. RSI is now coming back to our average. Look, needs to break that 39 level. If it goes green around here, then obviously it's buy time. It breaks this trend. It could just reverse off the trend line, come back down, and then go back up as I drew earlier.
To expose some of the divisions.
We'll see if this news gives us a catalyst. They're both high impact news results, remember, so 10 minutes to go. Worth waiting, sitting on your hands and waiting. Because you don't want to be caught in a trade going the wrong way. It's nice if you're caught in a trade going the right way, but that's a gamble. It's 50-50, of course, you know.
Divisive America, things like January 6th. These are, as you say, music to his ears. And now, as they are talking tough and say that they are in lockstep and in harmony when it comes to sanctions, what's actually playing out
it opened
is
higher.
The fact that he sees that
Saw it drop.
Be as easy for Europe
charts,
to come down incredibly harsh on the Kremlin when it comes to sanctions, because there are a number of countries who don't want to inflict the damage on their own economies.
Yep.
And this is really the question the West has to take into consideration. And we should note, Jonathan, that since the sanctions following the annexation of Crimea, the Russian business community, and I've spoken to a lot of these executives from St. Petersburg to Vladivostok, they have really started to insulate their economy to try to make it sanctions-proof.
AMH down in DC. Anne-Marie, thank you. Crude right now just short of 90.
Very true.
67 on Brent, up more than 1% on the day. On WTI, just short of 87 at 86.89, up 1.5%. Goldman's Jeff Curry had this to say. He expects geopolitical tensions to have little impact. Take a listen.
Our base case is no disruption. You know, it's very unlikely. If we think about the sanction-imposed disruption, I like to call it mutually assured destruction. It's not in the interest of any party to stop flows of energy through Ukraine or even into Western Europe.
Let's get to Bloomberg's Julian Lee. Julian, do you agree with everything Jeff Curry just had to say?
Yeah, I do. I mean, if you look at the geography, there's not likely to be any physical impact on flows from any incursion of
I disagree. I think oil will go up.
Carry oil and gas into Europe.
I don't trust what they're saying at all. I think if there's an invasion, oil prices will skyrocket. Oil holds above 85 and mid-tension.
And as both Jeff Curry and Anne-Marie said, you know, for Europe,
I'm going to get gold on my chart. Sorry, oil. There we go. As we can see, it had a dip, a sell-off. People sold off there at 87. Hit the support at 86, and now it should go back up again. So we'll get in on this, and we'll get in on gas as well. XNG, we're going to trade that. Gas is a new one I'm learning to trade. I went to some drawdown on it, but I did win. Sometimes it can go opposite to the news, so I'm just going to go with it on the news on this one, and yeah, just see. But gas prices are obviously been increasing, so if the news is good, there's more chance of it going up than coming down if the news is bad. So just be careful of that. But again, this is something you can trade on IC markets with a kind of $2,000 account. There is oil. So, and the news comes out for both those at the same time. Look, we see here the gasoline's the stock change, the EIA. And again, if you read what it says about the gas price,
Eastern Europe and increasingly to large parts of Western Europe.
Lost.
We're seeing domestic production within Europe going down. North Sea oil production is going down. Dutch gas production has gone down very sharply. The biggest and North African supply has been going down as well.
The good thing about gas is, like I say, when you do trading view, it's actually using pips, in 20, 30. So, yeah, and again, I'm looking for 50 pips. 10 pips, 5 to 10 pips on gas, and 50 to 100 points on oil.
The Baltic coast supplying more.
Obviously, you just got to be careful if it's at a level when the news comes out. Obviously, if it got to this level here, the news was bad, there's a good chance of the sell happening, so I'd put my sells in. That again, that's how it works. Obviously, look, told you just ranging around here, coming back down again. So again, you just want to just hold your position, don't do anything, don't enter anything at the moment.
Doesn't really suit many people in Europe.
Julian Lee, on a situation that is not changing. If you think it's a problem, and we're told repeatedly it is, it's surprising to see very little done about it. Up next, your trading diaries. We count you down to a Fed decision just hours away. From New York City, this is Bloomberg.
And from London City, this is me. So you can see gold's kind of waiting for this result. Log in and out again on my textbook. See Nasdaq 229, so
a lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses.
Load up Forex Factory just in case.
And that's the way you run good risk management. We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg.
Got the Canadian, which I don't trade, but you got the Canadian who's well coming out. New home sales, it's saying. Waiting. You can have Forex Factory as well. Are you? This is a backup. And you can actually refresh the news looking real time. It's pretty good. This is the one we're looking for. The sales predicted to be less. We're just 4 minutes away. They prioritize different things, crude oil inventories, look and stuff. So every website's different, but you know we're looking to trade this.
Does it stick? We've seen a lot of these moves go into reverse in the second half of the session. That's going to be dictated by Chairman Powell, you'd imagine. Up 1.8% on the S&P, a little more than 2% on the Nasdaq. The bond market story going into the Fed looks like this. Yields on a 10-year right now at 179, just a bit higher, up 2 basis points.
Trades balance, you see, they confirm worse than expected. Also, inventory is worse than expected. And now we're
President Biden meeting with private sector CEOs at 1
p.m. for this result.
We get a Fed rate decision and Chairman Powell news conference at 2 p.m. US GDP and Apple earnings coming up tomorrow, and finally the employment cost index rounding out the week on a Friday. From New York, I'll see you later for the Fed decision. This was the countdown to the open. This is Bloomberg.
Definitely a problem on my FX book. Glitching. stick on Forex Factory. Everything's still bullish at the moment. So let's see what this news does. This is going to be worse than expected, in which case we take buys on gold. Gold, see gold just getting ready to perfectly do a W for us. They could break to here. So these are the zones we can have marked out, take profit about there, or if it is. These are the area. These are the two zones we're looking to take profit in. 2 minutes to go. Just see what this does. Yeah, that's still 10. What we want. We'll go higher and hit this level here. Look, black part of the KG line, our baseline. Always go just underneath it. And that could be a TP2 if that's how you like to do your trading. If the news is bad, therefore we take gold as a buy, and vice versa. You know, you've got TP1, a potential TP2, top of our zone there. So
I believe the business will come back, and I'm very much hopeful.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become Chief Future Officer. This week, find out how Adrian Mitchell is reshaping Macy's mix of
news. Here we go.
digital commerce.
We have to let go of the traditional legacy
See what we get.
store habits and evolve with the customer.
Chief Future Officer, brought to you by Workday, Wednesday on Bloomberg.
Up with the broker, we're on.
As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most.
The world can be a noisy place. Stock prices are set to soar. But what if under all the noise was opportunity? Join more than 3 million users in over 100 countries and be empowered with Capital.com.
I can't.
Pepsi's number fever.
There's the push up, look.
The Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more.
And it's better than expected.
Than they planned. The resulting chaos caused riots, civil unrest.
So I'm going to see about selling.
Reporting this story took over
a retest.
And it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s.
In and out on this.
My name is Jeff Maish. I'm a journalist based in Los Angeles.
Ding.
I wrote the story for Bloomberg Business Week.
And if we get another $1 on this, or 50 cents, that will do.
The Philippines is a really interesting country. It's made up of thousands of islands. And it's also a country that's very heavily influenced by America. American culture is everywhere.
We've done it. Yay. There you go. We caught the sell from there. Perfect. I'll just show you. And that was 42. That was another $1. Yay. $7.57. So we've matched pretty much what we did yesterday. There we go. I'll show you the account live. My live account. So I took the sell on the news and we got 5 pips a piece. There you go. So 7.57. So yeah, getting on for 30% return on the account. And the results. That's it on my small account challenge for today. And that, like I say, is being patient. Got full wins today. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18 trades. All done. 18 winners. And
doesn't sound like a lot now. But in
nice.
1992, that was a phenomenal. You've got to remember that in the Philippines at the time, the average
news.
was about $100. So million pesos was wealth beyond anyone's wildest imaginations. Number fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number fever boosted Pepsi's sales.
Well done on trading options as well. One of the guys in the group just had a good win trading options. And there you go. Like I say, that's it today. So in the 2 days, 2 trades, 2 days of trading. There you go. That's everything. So we've had just 2 losses, 1 break even. Everything else is a win. About 30 odd trades there. And yeah, we've got our account up to $50. So which is good. So that buys me my dinner for tonight, which is what I said. I'll probably keep the 50 in there this time and we'll go again. We'll probably do another late night. But you can see, look, there was the dip down. That's all we wanted, was the dip down. 5 to 10. It's dipping down again, even lower now, look, you can see. And again, you know, loaded on here. My FX book's got a real big glitch today. But if you go to my to Forex Factory, look, as you can see, the news was it was 811 for a prediction of 744, so way better than expected. Obviously, I always go the reverse on gold. That's why I took the sell. As crazy as people might think, and as you can see there, it went from there and it just dipped down by that beautiful 50 points. There was the news, spiked up, came back down. It was 83. Look, I took 50. Perfect. This could come back down now, break the trend line. The RSI crosses the average line, you can be back in. Look, it might come down for 100.
Exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed.
And that's what true scalping's all about. I don't need big moves to make money, no matter what size account you've got. What you need is the system and the strategy and doing the homework on market structure and the news. The news is the big driver. This is it. That's what I keep telling everybody. So now what we're going to do is obviously get ready for oil in 25 minutes time. And I can't trade oil with IC markets. I'll just show you so you know what I mean. Look, you think you trade everything, you have the account size. Here's XTI USD, and as you can see on there, 0.5 is the minimum lot you can trade on IC markets. So I mean, I'm in the green, it says I can trade it, but literally there is no room for error. Margin required is 32 and I've got 37, so basically if it went against me by 1 or 2 pips, it would literally stop me out. So just, you know, and again, this is things I teach. Just because it says you're good to go on a trade here, the broker's not going to worry that you're going to get stopped out. Money for them. But you've got to know that when it says 37, really you need to, I like to 3 times it. So I'd need to have at least a $200 account to trade that to give me the drawdown, because you've got the spreads and you've got the drawdown, which you can get from oil. It's very successful. Can be very successful at trading it, but you got to understand that. But I see so many people who go, well, it's green, look, it'll let me trade it, I can put and then yeah, you blow your account in literally 2 seconds. Yeah, you're 50 cents a pip, so you know, no commission. Obviously it's a straight, just the spread you've got to pay. As you can see, it ranging around there. So we're not going to risk our account again. If next week we increase our account a bit more, then obviously we'll look at trading oil with it and go for it. We'll do an all or nothing. One trade takes the lot. But obviously I just want to keep this going and just show you how you can scalp with a small account, because I get asked it all the time and everyone does, you know, can I scalp? I mean, you can trade with a small account, but usually people want to do 1 long trade or 2 trades a day and hold. But you can scalp with the right setup, the right system, the right mentorship. You know, it's not easy. but it can be done, and I'm trying to show you that. You know, I wouldn't want to do this every single day. I want to put a bit more money in my account so I can just got a bit of breathing space to accept the drawdown that you're going to get and the odd loss as well. But yeah, it's good, you know, to you know, get 7. I started with £30 or whatever, so £5.60, so 10%, so yeah, nearly 20%, about 20%, yeah. So I'm happy with that. And today, like I say, I should be drawing it out. I said I would draw my winnings out. I'll get me another bottle of wine tonight. At least you can see how I do it. And again, I don't, you know, all I'm doing is clicking buy and sell on IC markets. I'm not looking at that chart that you just saw and analyze it or anything like that. Everything's done via here. So there was your sell. Look, there's a cheeky little sell. Now look, it's gone to a buy. You stick with the strategy. People would look at this and go, well, you lost. No, it didn't. If it was on a bigger time frame, you would, but on the 3 minute, this works well. That was enough for 55 pips, take some green, and now we're looking at the W forming. You can see W is going to be, yeah, we had an M, second leg M, and just before he went off air, said we'd have a retest of this zone. And this is what we drew out earlier on, and it could come back down again. This is why sometimes if I'm stuck in a trade going the reverse, I don't panic, because I know there's a high probability that the price is going to come back down. So it's just, if I was holding that sell from the news and thinking, oh God, I need to end it. No, you wouldn't end it. You'd end it if you get a significant green candle break. But otherwise, wait for this to retest it. And even if you don't get back to break even, you could halve your loss. Then you put in a buy, and then you regain your loss and you take profit. That's how you scalp and keep in profit as a trader. You don't just end one trade and panic and walk away and go, oh, I've lost, you know, it's not for me. You learn how to win back, and it's not revenge trading, because you're not losing your temper. You're not just clicking any old button and revenge trading. You know, that's garbage. This is proper trading using the analysis and using the structure to win back your losses, or at least break even. You know, I won't end my trade until probably price has touched our baseline. At the moment, you know, it's looking like it's coming back down again.
At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory.
We've got the oil news coming up. See, going to be on Forex Factory, crude oil inventories. So it'll be interesting to see what result is there. I have a trade on my FX book, but I don't know, somehow with the website some issue. If anyone else can tell me if they've got issues with it, well, with their economic calendar. Seems to be back on now, but there we go. So there's the result you wanted. New home sales, you see, both good.
Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue warrant to my father. My father passed away January 13, 2010. After staying for almost 1 year in the hospital, he died of complication due to heart failure.
And just seeing what happened on US 30 actually.
PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out
on US 30, the news was good. So yeah, you had a nice win. It was up against that trend line, but look, it did it. Yeah, and this is how you test that I'm not talking BS. Yeah, all the information's got a back test. You can see all these news spikes and gauge whether they're winners or losers. But you can see there was the 257 candle. So you entered a buy in on that candle there. I'll put this down as, I'm going to mark this news. So you'd gone in on the buy there, as you can see. It would have been from the top of that candle to there. Look, easy, massive win. I'd only go for 10 pips, because I'd go to the breakout zone, 300. The 35 pips you could have had on the win. And this is the advantage of having a bigger account, so you can trade the US 30 and DAX on news, because you get a little bit more from it than you do on gold, because gold you've got to pay a commission and a spread. On these indices you just pay the spread. Obviously on news events, when you get a good move like that, they're far more rewarding. That would have been $100-200 move possibly, against something that most people would think is crazy to trade, but obviously they don't understand how it works. And then you get the reversal off the trend line. So not only could you have got the buy, as soon as you took your profit here, you'd have also taken the sell coming back down, because it's coming off a respected blue zone resistance and a trend line. That's what I would have been doing if I'd had a bigger account. Obviously with US 30, you know, you want to be $500 to $1,000 ideally, in case you get stuck in drawdown again. You've got to have that money to one side.
When the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
Explosions triggered at the same time last night.
Been on the Holmes news.
In the south of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were...
Anyway, let's focus on gold. No, sorry, gold, not oil. Oil, we're looking at oil. And obviously at the moment, where this is set up, we would want the news to be worse than expected, so we get a bit of a sell-off, but we could get a bounce off our trend line. We've got a double trend cross, always risky, but again, we'll go for it. I'm going to go on the bigger account, and we're going to that 5 to 10 pips.
Dortmund is a mid-sized city in the western part of Germany, in a state called North Rhine-Westphalia. And it's a former industrial city that's kind of fallen on hard times in the last few decades.
After this, we can have a coffee break.
The center of the city is quite stark.
14 minutes to go.
Points includes its soccer team.
My name is Ike Henning.
And his information is there on what there is to do. Try and get gold. Try and get gas. I've got gold on the brain. We'll try and get oil and gas away as well. So I'm just going to.
Most German cities, soccer does play a very large.
XNG, so XNG, USD up, and STI. An XNG minimum lot size on IC markets is 0.5, and you've got to have. Actually, the margin's not stupid at 80 margin. So again, $500. You could do it, and you're talking. I mean, the advantage of trading gas is it's $5 a pip, 0.5 lot size. So, you know, you can win big on this. I mean, you could lose big, obviously, but you know, $5 a pip. So 10 pips, $50. You know what I mean? Nice and easy, and this thing can move. So we'll have a go at trading gas anyway, and leave that running, and come back into the group with it. And then oil is pretty much the same. Like I say, oil, you can trade 0.5, or I go 5 standards on this, which is a margin of 324. So you need like a $2,000-3,000 account. I'm trading a $5,000 account on these two setups. So let's see. But the margins, yeah, the margin's 324 on oil for 5. Go 5 on gas as well. That'll give me 792, so it's a higher. Let's go 4. 632, let's go 3. 474. Yeah, let's try that. Try that. They go 3 and 5.
bus, took off the parking lot of the hotel and turned on the street.
And obviously these are ones that will run for a little bit, so I'll end them in the group, but at least I can end the live stream by seeing what results we get on these. And again, it's something to practice on demo, of course. And then everyone's going to be waiting for the Fed decision in the next 3 hours or so. So
people screamed, people jumped to the ground.
Again, you know, if you haven't got my FX book working, then use Forex Factory, but like it's working.
An attack of the Dortmund bus, and I thought he was like, that was impossible.
Some of the players screamed.
It's the API one, which is later on. You know, this is on. It was yesterday. It always takes a time. I mean, it hit target about an hour later. The oil ones usually take a bit of time. And tomorrow, those of you who want to trade more news events, again, we've got German consumer confidence, the Euro Open at 7 my time, London time, so an hour before London. So again, you can either trade that or use it as a catalyst for trading DAX on the Open. Back to the employment rate for Spain, which I never really take much notice of. Bank of Austria, again, manufacturing PMI could affect DAX again. So that's another good one. An hour after London. And then I ignore the DB, that one. And then we're into jobs, the weekly continuing jobless claim or week average. So, which is really good. I mean, that's the good thing about trading news events. These are weekly news events. So, yeah, if you just did one trade a week, you trade this and get some extra money. Durable goods as well, it's backed up by, and also the GDP price index and growth rate. So they're all the same. So the only issue you have is when you've got some news events is that, like I say, you want the majority to go one way or the other to give you a guide. Durable goods is month on month, you see, so it's quite high impact compared to the news of the jobs, which is every week. So you'd hope they all want to be in the same direction. We take the trade, and the quarter four's GDP is also expected to be better than expected. I mean, 2.3 and going up to 5.5. So that's expected to be. Then you've got the Open, which you can use all this news to give you the gauge for the Open. Then you've got the pending home sales, not the new home sales, but the pending. So similar to what we just traded now, ones that are in process. And again, that's your day done. And then Friday, we've got some French GDP again early before the Frankfurt Open. Again, you could use that catalyst for trading the DAX. Or then you've actually got the DAX 1 hour after London. Again, high impact, so they're worth definitely trading. And in the US, got personal income and personal spending. Our favourites, Michigan consumer sentiment for January. It always ends our week off 30 minutes after the Open. This is why your trading's done, usually within 90 minutes after each session. You pick because the news is done and the markets retrace back to their normal kind of levels, and you either continue scalping or just wait for the next news event, you know. Especially when you're trading a small account. You see, look, gold. Said, coming up, forming this centre leg.
He seemed like an unlikely suspect because he had no known connections to the Islamic terror world. He didn't seem like a far-right extremist.
Run out. What I could use my winnings for.
He seemed to be a completely unremarkable young man.
A 28-year-old German-Russian man named only as Sergei W. stayed in the same hotel as the players on the night before the bombing. He specifically requested an upper room overlooking the bushes where the explosive devices were hidden.
The media dissected why he would do that, what was his past.
He had been inspired by the 2015 terror attack in Paris. And he noticed that in the aftermath of the attack, the stocks of French companies went down. And he believed that if an attack took place that was directed at a specific company, that the decrease in stock price for that company would be even more dramatic.
It never occurred to anyone that someone would do that out of greed.
We now know that the suspect bought 3 different derivatives on the Borussia Dortmund shares. With all these derivatives, he bet on falling shares. The suspect bought the majority of these financial products on the 11th of April, the day of the attack.
If the plot had been completely successful and the stock had reached a value of 0, Vayner Gold would have made up to 570,000 euros, or the equivalent of about $608,000. Ultimately, the plan completely backfired.
The attacker, Sergey Venegold, didn't make
I'm just watching
money.
gold on this. Switching to oil.
In court, he would be extremely
Gas.
quiet. He usually kept his hands clasped together. One of the lawyers actually commented that he had never seen a defendant act
So gas has come away from a high there. Still doing it about it $4. I think that 175. It's on a support at the moment, so that's sat quite nicely for a news event, because you know you're going to get a move when it's in a range as opposed to a continuation of a trend. And oil is the same. You know, one's on a support, one's on a resistance. Obviously, I'd love it to be worse. Get a bounce
Brought everything back up, and it didn't quite
or
help them
5 to 10 pips.
process what was going on.
Throughout it all, he sat there completely silent.
And mark this on for back testing again. We'll gauge how many are winners and losers. Direction, whether you go counter or you go with it.
Rebecca
is the mental. There.
Ultimately sees her relationship with Vayner Gold as an opportunity to leave that troubled home. Vayner Gold is a Russian immigrant to Germany. He speaks with an accent. He has anxiety in large groups of Germans. She begins to resent the fact that he has these fears and feels a little bit trapped.
Then we'll leave these trades running. We'll end any trades obviously before the Fed starts to speak. 7 PM UK London, it's 2 PM Eastern time, and then we can go in on gold and maybe scalp live as he talks. You know, fun, risky, fun, but it's always good. With things like that, what I used to do, you know, what I have done is just put money aside into a separate account. And just say, look, I'm going to trade $100 while the Fed speaks, and if I blow it, I blow it. It doesn't affect your main account. That's why I have so many accounts. You don't risk blowing by some crazy event, spike, whatever, or pandemic kicking off that you can't predict. So if you want to trade something, you can say, right, I've got $100. I want to make it 200 while he's talking in the hours he's doing his speech, and just flip backwards and forwards, trading gold or US 30 or whatever you want to choose. So that's a safer way to trade these, like kind of big one-off event kind of things, is just put some money. It could be 20, again, could be doing what I'm doing, just $20-30, and just say it's all or nothing. I mean, if I'm going to blow this, I'm going to double it while he's talking. You know, it's a bit, see, it's a bit of fun, but also it's practice in terms of the method of scalping, and also you get to know how good your broker is in terms of executing trades quick enough when there's a high impact news event kicking off, because they love to have delays and glitches as always. That's again why I love IC markets. They seem to be as quick as anybody out there. So we've got 3 minutes to go. These dual news events on gas and oil. Again, I don't expect major spikes like you do with other news events on these. These can be quite slow burners, and you've got some serious spreads or bigger spreads, especially on gas. So again, I'm just going to leave this one running, set a level of 5 to 10 pips and see what happens.
Away from major populations. No human in the past 1,000 years is known to have been killed by a meteorite, and according to NASA, no large object is likely to strike the Earth any time in the next several hundred years.
We're getting ready for the countdown, a couple of minutes to go. Good luck to everybody if you're trading this.
Is certain. We haven't found them all.
There are thousands out there, and we don't know where they are.
Yes.
There are a lot of asteroids in our solar system. The number
Scientists all over the world are working toward detecting and deflecting the most catastrophic of natural disasters.
The race is on to find as many of these objects as we can.
We have a way of calculating whether or not an asteroid is potentially dangerous or not.
I mean, I think it's
A minute to go, countdown.
It's our existence at stake, right?
I'll be leaving alone now. It's just purely gas.
Get this one out of the way. It's probably the question you get asked the most. But how scared should we be?
Asteroids and comets are a natural hazard that's out there, like a lot of other natural hazards.
And could spike down just a little bit. RSI is looking good, but again, we don't know. You know, TA has nothing. Not say nothing. It has little to do with the results of new. You know that it's levels, resistance and support were what stopped the continuation of the trade, basically.
The object that wiped out the dinosaurs was somewhere in the neighborhood of 5.
These can go to the opposite to whatever I think. It not really fussed. It's, I want to see the result. Let's see if we can get a couple of trades away.
For objects that are capable of causing
On the countdown, and so at the moment, gas is right in a range, look right in our neutral zone, and oil to take a drop from a heavy resistance zone. So let's hope that's worse. Let's hope this is good. Who knows? 30 seconds to go.
In 1994, stargazers watched as comet Shoemaker-Levy 9 hit Jupiter. The resulting zone of chaos was estimated to be as large as the Earth, and the event became a turning point in the search for asteroids and comets.
10 seconds. Look, everybody.
Congress tasked NASA with
Oil
finding
and
90%
gas.
of asteroids and comets 1 kilometer wide or larger.
Two on. Let's see. What
Soon
do we
after,
get?
Hollywood blockbusters Armageddon and Deep Impact brought attention
No, they're both bad.
to the masses.
The great news is that the vast majority, more than 90% of all the really large 1 kilometer.
Okay, come on, flashed here. It's actually better than expected, but it's not. Look. It's come out green. There's some massive glitching with my effects book.
Can you give us a sense of how
Have a look
many
what
are out there in our solar system?
We know that there are a lot of asteroids in our solar system. They number in the billions. Most of them, however, are between Mars and Jupiter in what we call the main asteroid belt. This is a region of space where most of the asteroids in the
Yeah, it's a 2.4, so they're definitely worse than expected.
there for many billions of years.
Leave these running.
There is another population, though, that kind of leaks inward and gets into the region somewhat close to the Earth. And we call these
And
near-Earth objects.
Pips gets
We
you
think that there
15.
are millions and millions of near-Earth objects that are out there in the total population. As of today, we know of sort of around 20, 25,000, something like that.
Brilliant.
When we
Out
first spot an
on.
object, we really know very
We're
little.
out on gas. Gas. Bang, I've ended it already before I even got a chance to set a level. I took my profit. It flashed before my eyes. Let's have a look. Wow, it's just a small move as well, but it was worse than expected. So
Is it large or is it small?
there was the level.
We have a lot of information that we have to get pretty quickly.
That's what I got out of.
Finding
There.
asteroids is just one piece of the puzzle. Planetary
And
scientists
not even seen what I've won yet, so
determining the
like that.
orbits and speeds of asteroids
Into the
based on
group.
relatively small amounts of data.
What do we get? We got
NASA runs
60 and 83, so we got £143. So we got about $200 there on the sell on gas. Oh, and that's the second time I've traded it.
Our method is very quick. So you can very quickly get an assessment of whether or not the object is dangerous or not. If you look at the classical way of determining the danger of an asteroid, it may take days of computing time, very big machines, to determine this hazardousness.
The current problem is that there's just too many asteroids out there to spend a huge amount of computational power on all of them. So the neural network allows us to focus on.
Yeah, gas was away. Yeah, I mean, I could have held it, but hey, look, you know what I mean? I always say to people, take the green. If you see the green, take it. Don't be scared of taking the money. And again, you look at this trade and you go, where was the sell? There's nothing, but he did it. Just pipped down just that little bit, just by 5 pips. Like I say, I was using 3 standards on it, and that was enough for $200. So that'll do. I don't want to be holding it. You can see it's on a support and the resistance is bouncing around, but just the news will move it, and then obviously it's moved it to the downside as it is doing now. Look, so if we get some red on here, we can go in for a sell again. That was good. And obviously here's oil, look, coming down, as we said, oil news. And I would say the TP is going to be right here.
Neural network was able to go and identify.
And I'm just going to end that now because we're almost there. Brilliant. There we go. I just ended that trade just live, and we got 25 and 30. So we got nearly another $100 there on the oil sell as well. And if you want to, but you know, in and out. Nice win. Oil, because you can always go back in again.
And one space is really big, and then you have to have very exact parameters to shoot an asteroid that goes and hits exactly Earth. And then Simon had the ingenious idea, not even trying to do that, and just launching the asteroid
Back down a level perfectly.
Backwards in time.
It's very hard to make it hit.
There you go. That's why I like trading oil, and now I like trading gas.
Which all end up in nothing. And the idea was then, like, well, let's not do that. This is basically what NASA is doing. NASA is taking an asteroid, making multiple copies of them.
Again, some unusual, you know, things that most people wouldn't consider trading, especially gas.
Not even hitting Earth, but getting close to Earth. And that they call it a potential impactor. So you calculate the solar system forwards in time for, let's say, 1,000 years. And then you launch asteroids from the surface, as if they, if you go forwards in time, would fall on the surface. You calculate them backwards to today, and then you get your orbital parameters of today's asteroid, which you know will land on the planet.
There's the cell again. Look, on gas, see what I mean? Look, it's gone all nice and red. You've got a few more pips on it, but that's the secret, not being greedy.
And those things fill in the gaps where perhaps telescopes and other imaging tools can't.
Absolutely. Since the observations get more complex, the physics gets more complex, and if the physics get more complex, the mathematics becomes more complex, and at some point you can't solve your problems analytically anymore, and then this is where the computer comes in. Now we have this trained neural network, we have a way of calculating in a fraction of a second.
There we go. That was a great end to our stream. Yeah, there you go. The news was bad on gas, and it sold, and we won $200. And the news was bad on oil, and we sold, and we got $100. And that was all within the space of, what, 5 minutes from the news event. And that's the power of having and like I said, that's a $5,000 trading account. That's the kind of figures you can do when you get to that kind of level. But in terms of the technique, it's the same as what you saw me trade the small account. No different. I would, you know, if that was $1, doesn't matter. I'm in and out, taking the money, taking the wins. That's what you've got to do. So happy with that. As you can see, that was a fairly easy one because the results were pretty well away from what expected were, which is always really cool. That's what you want to see with these news events, and when they get it wrong. Next up is the Fed rate decision later on. And like I say, if you want to practice scalping that, you know, do it on a demo with gold and see how it flicks around. It's quite interesting to watch.
You have a long time or a long stretch of
Got the news
runway
which is
small twist on the bowling ball will make a big change
pretty good.
where it ultimately ends up. Another option would be something where you take a very big, massive spacecraft and you park it next to the object and you use the force of gravity as a towing rig. That takes longer though, and you need to be able to send a pretty massive spacecraft, and it obviously depends a lot on how big the object is. Other options start to get more and more complicated, and they range from painting one side of the object white color and painting the other side dark, and then letting the pressure of light sort of perturb its orbit.
In a departure from the lab and computer simulations, NASA has real plans to rehearse kinetic impact deflection. In 2021, the agency will launch DART, the Double Asteroid Redirection Test mission, which will intercept a 160-meter asteroid in 2022. Better to practice now before we have to deal with an actual threat. In the meantime, discovering asteroids is our best bet. Thousands of scientists and
make sure you join me on the next live stream.
Make up an informal network that survey the heavens. But that may not be
more.
NASA wants more resources
to
our solar system.
What I might do is do another live stream tomorrow night about 90 minutes before the end of the New York Open, New York close. There you go, look, just a confirmation on that gas sell on the news. And again, oil. I mean, it does it, look, it reversed, but it doesn't matter. You got your pips. We got our 10-15 pips, and that was it. It reverses. And what you'll find with this is it'll hit here, and you can sell again. Go in again, sell again. Yeah. But this is the news event. You want to see the new spike.
A lot of natural disasters, and like climate change is a problem of the global commons.
Spot on.
The thing that we risk collectively is that it sort of then becomes nobody's problem, and nobody takes ownership over it. The asteroids are all over the sky. They just truly cross boundaries and borders with a second's notice.
I kind of imagine in the future, maybe lots of small satellites around the Earth that are always going and looking outward. I mean, I think it's something worth investing in. It's our existence at stake.
That's been a good session. Yeah, gold, look. Gonna do, look at that. Bang on with the gold. Could have gone in for more sales with a small account on that. This is what I mean. So many trades you can do with this system. Just don't panic about missing out, because yeah, look, while I was doing the oil and gold, look, I could have come in and got in on this cross here, look, and another $1 on my small account. But like I said, now I know what I'm waiting for. You're going to wait, and you're going to want to trade this second leg. Just going to post that into the group so people follow. So watch gold for the end.
The pandemic has affected everyone in different ways. Some pass the time by baking.
Homemade sourdough bread. Do I need to say more?
Perfect.
Some chose to binge watch Netflix.
And okay, there you go. Wheels now broke up, but it doesn't matter. You caught the win on the spike here. And like I say, I would just wait until you get the RSI come back down, and then you sell again. So, but all at the moment, like I say, is on its way up. Whole trend is up, up, up. So when you do the news events that go the opposite way, you just got to be wary of that and know you just want to be in and out. Whereas if the news event pushes, is already in a continuation of a trend, then obviously you'll get more out of it. Like if it had been a buy, I could have loaded more trades in, because I know it's got a bigger chance of going up there. As I said to you, the pullback on oil at the moment is just going to be minor, like it was here, because it just wants to go up because of what's happening in the Ukraine, Russia, etc. So always look at the bigger picture. Like I say, that's my bigger time frame. That in my back of my mind, I know I've got that in the back of my mind, that news to help. So I know I'm only going to go in and scalp this bit and get out, hit our zone and gone. Cool.
This isn't a wealthy person's game anymore. Anyone can play.
So that's it, ready for tomorrow. So yep, thanks for joining me again on live stream. Thanks for Justin for joining me from Louisiana, and look out for the next live stream, which hopefully will be towards the end of New York session tomorrow, and see if we can scalp. Obviously there won't be any news around, but we'll see if we can use the axe trading system to scalp live on the small challenge towards the end of the New York session. So until then, thanks for joining, and like I say, go to the website www.mohawkforex.com if you want any information on how to join our group, and please give us a like and subscribe if you've not already done so, and we'll see you ready for the next true scalping session. Take care all.